Hey, it's Dan Morales. This is Homebuyer Radio. This is episode number 164. At least I think it's episode number 164. That's what happens when you get older. You tend to start to forget things, right? Hopefully I remember what this episode's about. Anyways, I just started a series real quick talking about the 4 C's of credit. Last week we talked about the cash component of that 4 C's of credit. So you have cash, you have credit, you have collateral, and you have capacity. This week I want to talk about the credit portion of those 4 C's of credit. Obviously, credit is a really big factor when it comes to getting a mortgage. Credit is probably one of the biggest things that impacts the terms that you can get for a mortgage, when it's all said and done. Now, a lot of times I have this conversation with people, and if you've listened to any number of these, podcast episodes that we've done, we talk about credit and credit scores and stuff like that. And, the difference from a mortgage credit score to a score that you see from Credit Karma or Capital One or, one of your Discover card or something like that. Those scores that you see from those companies are, if you will, a different scoring model than what's used for mortgages. Oftentimes, those scores are a higher score than what you're typically going to see for a mortgage. So it's one of those things when I talk to clients, do you have a rough idea of what your credit score? Yeah, my credit score is, 630 on Credit Karma. Well, that means you probably have a mortgage credit score, at least for a lot of people, that is, a good chunk lower than that. So it's one of those things where just because you have access to a free credit score from, a company that gives it to you free, oftentimes that information is just not going to match up with what your mortgage credit score is. Okay. So what we're going to look at, when you look at credit, what you're doing is you're looking at a credit score, but you're also looking at, what does a client have for overall monthly payments? And, what types of debts do they have? Or do they have other mortgages? Have they paid mortgages late? Previous mortgages late? Do they have foreclosures? Do they have bankruptcies? Do they have collections? Now, collections is a huge issue. Okay. So when you get, let's say, a collection, notice in the mail, and that collection notice is for maybe a medical bill that your insurance company was supposed to pay, and you're like, well, forget it. They should have paid it. I'm not going to, worry about this. They should have paid this bill. And if they didn't pay this bill, then, I'll let them worry about it. And, I'm just going to go on with life. Let me tell you right now, if you get a collection notice in the mail, you need to take care of that, and you need to address that right away. Even if you think it's an error, then you better reach out to that collection company or whoever turned you over for collection, and you better get to work on getting that addressed. And because if you don't, maybe it's a little $10 collection, right? I can tell you about a client. We did a deal I have a client that I've done, probably 10 or 15 loans for this client. He's just a wonderful guy. Has never paid anything late. Got into a fight with a credit card company over like a $10 charge. Didn't pay that $10 charge. They ended up turning him over for collection, and it just ended up waxing his credit score by nearly 100 points. And of course, that happened right when he needed to apply for a new mortgage, and it ended up becoming a big production to try to get that fixed. So when you get a notice of a collection, you better address it, because if you don't, it's going to cost you, and it's going to cost you big time. So when you address those things, you should be doing them in writing, and you better be doing them through the mail, because that is the only way to preserve your rights under federal law. If you're just picking up the phone and you're having a phone conversation and something like that, that doesn't preserve your rights. You need to do this stuff in writing to preserve your rights under the law. Otherwise, you could find yourself in a world of hurt thinking that you've addressed it or you did something with it, only to find out that it really didn't do anything. But credit score is a huge deal, right? To get the best and most favorable mortgage rates and terms, you generally have to have a credit score over 740. Now, depending on the program, that may not necessarily be the case, but for your typical conventional mortgage, you got to have a mortgage credit score over 740 to get the best rates and terms. Now, if you're looking at an FHA type of loan, that threshold is lower, and it can vary from lender to lender as far as what credit score you have to get the best rate and terms. And that's also true when you look at VA loans or you look at USDA loans and so on. You can have, if you will, variations as to what credit score you have to get the best score depending on the lender that you're working with. So credit is an important thing. If you have collections, do you have a history of collections, right? When you look at overall credit history, does somebody have a history of collections and or late payments over time? Meaning that, if we're in 2020 right now, do you have a history of making late payments in 2019 and 2018 and 2017 and 2016? Well, if that's the case, you've identified that you just have a lot of disregard for payment history and or credit. If you're somebody who maybe had a really good credit history and you had something happen in life, and in 2017 you just had a bunch of late payments and bad credit because of something that was unique that happened in life, but then you got it back together and you've been paying on time since then you can, for a lender, you can oftentimes tell that, oh, there was something that unique that likely happened in that person's life that caused that hardship, and they've been able to cure that hardship and they're back on the saddle and things are going forward. So when I have clients that tell me, oh, well, I had this happen in life. Well, did it happen over the course of 5 years that you made late payments for the last 5 years? Or did it happen over a short period of time where, it's explainable and it makes sense? Because, when it comes to lending, a lot of loans can be done and they can be done as long as you can connect the dots and the pieces come together and the overall risk makes sense. So when it comes to evaluating credit, it is more than just a credit score, right? I'm kind of jumping all over and talking about credit here, in a number of different areas real quickly, but it's more than just a credit score. It's understanding what is your overall payment history, what types of credit do you have out there, do you have collections, do you have judgments, do you have student loans that are in deferment, or do you have student loans you're making payments on, do you have a high percentage of credit card debt, where your cards are almost maxed out, because all of those little pieces are part of what, if you will, makes the puzzle of a good and successful mortgage transaction. Now, if you're somebody who doesn't have credit history, maybe you're somebody who has, always paid cash and, you were taught that credit's a bad thing and you don't have a payment history or a credit history. That can be as bad as having a bad credit history sometimes because you don't have a track record of proving that you've made any monthly payments or that you have the ability to make a monthly payment. Now, that doesn't mean a loan can't be done. It just means that, oftentimes a lender is going to spend some time and energy documenting an alternative credit history to be able to prove that you have, let's say, a savings pattern and that you've paid other things on time. Maybe it's, car insurance, maybe it's rent, maybe it's utilities, maybe it's some other reoccurring monthly payment that we can document to prove that you've actually made all of your monthly payments on time, as you move forward. So, there's a lot of moving parts to credit. This is just a really quick explanation on how credit ties in with cash, as well as collateral and capacity to make up whether or not a mortgage is one that can be approved when it's all said and done. Hey, I'm Dan Morales, America's Mortgage Man. You can find me online at danmorales.com. That's DANMORALEZ.com. My phone number is 616-931-4629, and my NMLS number is 709729. Hey, thanks for listening. I hope you have a great day. Talk to you soon.